Let's do this.
What All right, we are.
Look at
we should be live.
We should live. What's up, people?
Sorry
for the delayed thing, but we were having good catch up and vibes. Isn't that what the cool kids say? So, but I think we've nearly finished whiskey now, and I'm pretty far gone, to be fair. So get the content.
Yeah. So welcome. Should we have our introduction? We'll say welcome to our. I guess this has become a bi-weekly show this week. We decided to have a special Friday edition. I don't know if people can hear us, by the way. Is there any way we can test this audio?
How'd you get on the tube? I don't even know what. Have you tweeted out the link?
Yeah, it should
cool.
be on there.
Oh dear. How are we looking? Can you hear us, people? Earth to traders.
I don't think there's how do I get this on? You know what? We're just gonna go with it.
No, the audio is working. It's working. I've just tested.
Oh, is it? Okay. Sweet.
Unless
all right,
we're good to go. In the last couple of seconds. Go ahead, sir.
Let's get this party started. So welcome to the show. This is the second installment of the week. We've decided to have a special edition, which includes our Scotch drinking. Usually, the last few shows we did, you were drinking, and I was not involved. So this is the first one where I am. And
yeah, you're drinking at what? What time is it there? Like 2 p.m.?
I think we started, it was 2 p.m. We started drinking around 2.
Oh, yeah.
I've pretty much finished this bottle at this point.
Yeah, the plan was to chat from 7 till 8 o'clock, and we've been drinking for 45 minutes and not even streamed yet.
Yeah.
So
we had a nice chat. We had a nice chat about markets and what's going on today. So let's just jump in and start off with stocks. We've got the market open still, so we've got another hour and 15 minutes of trading.
Yeah, this can be the closing remarks. Lovely. We'll pretend this was all time.
We can have our own we can have our dumb CNBC show where we make up a whole bunch of stuff, and whatever we say, you have to do the opposite, and then you'll probably make money. Yes. Just like when you follow
disclaimer. CNBC. We're supposed to do these disclaimer things. So disclaimer, this is for informational and educational purposes only.
Do you have the slide?
I may do somewhere actually. Yeah.
Well, you have the slide, right?
I did have the slide. Oh, hang on. I'll be on it. Let's get on it. Here we go. Let's pop that. Oh, wrong thing. We pop that there. Perfect. Look at that. Professional as ever. Oh, lovely.
Oh, baby's in the background.
Baby.
All right, so we've got not financial advice. Yeah, so basically,
this is just a podcast, just to have a nice little chat. Basically, as Thomas said, it's just for informational and educational purposes only. No liability is accepted for any trouble that we come out with or any loss that has been happening. And that's about it, to be honest. So let's get straight onto the markets. Let's do this. As you said, we've got 15 minutes left. So, markets in general, it's been a pretty steady week. Seems personally that the week is a little bit indecisive. There's not really a lot that we can really take out from the week other than the uncertainty that is still going on in the markets. Until we start getting a little bit more of a clearer picture, I think, of how economies are going to start opening up and how successful that will be, is another question mark. So, the way I'm seeing it is just taking things week by week. Not a lot happens this week. Where are we now? What's the date? 24th. So the next thing I'm looking at, really, because even any fundamental data that comes out is so skewed, it doesn't really matter too much. So for me, the possibility of more things coming out at the start of the month and different news, whether that's delinquency rates, if we start getting data on delinquency rates, whether it's credit cards, whether it's mortgages, whatever, just to try and get some sort of data to see how consumers are behaving for the start of the month. For me, that's the only thing I'm personally waiting out on, since, I mean, from a fundamental play, that's all we can. And then whether that actually turns the sentiment a lot more negative remains to be seen, to be fair, man. I mean, it's been, as weird as it sounds, a really crazy week, yet boring week. I think everyone's got used to the crazy swings. And I mean, the VIX now, I mean, if we go over to the VIX is actually today down 10%. So, I mean, the VIX down to 36.9 at the moment, which is really good, because as we were coming into the start of the week, it looked like that we were going to break out and then we weren't going to go higher. But the VIX is really taking a dive today. So for portfolio managers going into the weekend, that's really positive. So if that then opens below the 40s and stays in the 30s for the rest of next week, that's really going to settle some nerves. So yeah, and then what else have we got here? So, I mean, if you don't mind, Thomas, I'll carry on. For me personally as well, the corporate debt market has been really important. One of the things that's really been important during this market. So as you can see here, this is the LQD. So this is for your investment grade bonds. This is the investment grade ETF. So to be fair, I mean, it's just practically gone back to the highs of what it was before all of this crisis started and the pandemic, simply because of the amount of Fed buying. So with the amount of buying from the Fed, maybe should we talk about the European Central Bank as well? They're going to be doing the same. So they're going to be following the Fed, and they're going to be buying junk bonds. So if we look at junk bonds, so JNK is the ticker. They've been...
Wait, did the ECB definitely announce? Sorry,
they announced.
Was curious because the last I heard. Okay.
From what it.
So how would they be? What vehicle?
Go ahead. Hello.
Sorry, buddy, I got a phone call that cut me off. But I was curious, what vehicle would they be using to get into buying high yield or junk or whatever they want? What did they announce they were specifically buying? Just corporates?
Look, so from what it seems like, because obviously, so I mean, for people who don't know, the problem with the European Central Bank at the moment is that no country can really definitively agree on some sort of stimulus package, emergency package is what they're calling it. But at the moment, so one of the main things is the Corona bonds. So that's obviously been spoken about quite a lot. So for the southern European countries, that's obviously very attractive, and that's what they want, basically. Whereas some of the northern European countries really don't want that to happen, because that would mean that they would have to share the debt basically out, which, I mean, personally, as a Brit, I thought that was the whole point of the European Union. But yeah, doesn't matter to us anymore, does it? So if we have a look, I can try and have a look now. But yeah, in general, junk bonds for the US, they haven't performed that well, to be fair. Whether that's, I mean, I'd be so interested. I wish I had the data of the amount of buying and selling within junk bonds. But yeah, junk bonds aren't performing too well in comparison of high yield bonds. So this is LQD.
Right, and that makes sense, right?
I mean, yes, but then, yeah, it's difficult, because I think the biggest problem that the market has at the moment is every institutional investor at the moment is like, yeah, well, if I buy something now and it goes down too much, well, the Fed are just going to buy it anyway. I mean, I think there is that kind of expectation that we're having at the moment, where investors are thinking, well, if the market goes down too much, then the Fed's going to start buying stocks, which would be, I mean, that would be Japanification in itself. So,
which is illegal, by the way. Like, just the fact that they announced they were going to buy the HYG ETF was like questionable in of itself.
And so, I mean, it's just a bit crazy, to be honest. I mean, depending on how you see it, I mean, we can't talk about the amount of conspiracy shit that comes out these days is insane. Like, oh, this is going to happen, this is going to happen. All we can literally say is, okay, this is what's come out at the moment. So how can we play it? Because, I mean, as much as, people want to be a hero and be like, yeah, this is going to happen, we honestly don't know. So until we get the actual news that the Fed is going to do something, I just can't, from a risk point of view, you can't really do anything. I mean, this weekend, coming into the weekend, I've reduced quite a few positions because I just don't feel comfortable. I don't know. I don't know what it is. I just don't feel comfortable at the moment. So I've reduced a few positions and reduced exposure because, I mean, these weekends are just traps at the moment, the way I feel it. And I mean, especially with Bitcoin. I mean, Bitcoin's obviously doing really well the last couple of days. But then at the same time, with the high correlation that it has with the S&P, it's like, well, it could perform well over the weekend or it could perform bad over the weekend. And then if the S&P ends up having some bad news over the weekend that pushes it down, then it's just going to become really toxic again. So, I mean, I suppose that's the beauty of us being just individual.
Yeah, I'd be interested to see the Sharpe ratio for, the correlation between Bitcoin and the S&P just this week, because I think they've decoupled slightly. And I don't know if that's a result of people waking up and being like, okay, I really need to put money into something that, absent gold, maybe diversify into crypto. I mean, I find that hard to believe that people are doing that right now, unless it's purely like a halvening play, because the Bitcoin halvening's in May. But I would have expected this to be priced in. So there's something going on. And you know what? Whoa. You and I did not get a chance to cover this last week, but I'm going to find this link, and I'll let you have the floor for a second.
Oh, I was going to say the same to you. I was about to say, well, if you want, I can try and actually calculate the correlation for the week for Bitcoin and SPY, but each to their own, no problem. I'll carry on. So what shall we look at? As we're talking about the high yield bonds, so still doing okay. I mean, it's one that I'm still keeping an eye on, simply because it is so important, and companies have become really indebted over the last cycle, simply from different things like share buybacks, etc. So I think if you are looking at stocks as well, so if you are looking at positions, I think it's very important for people to look at the payout ratio. So for people who don't know what that is, it's basically the amount of percentage of earnings over dividends. So if you can easily just Google it. I mean, you'll find it, no problem. So if you are looking at specific stocks, I think it's very important to look at the payout ratio of either the last 12 months, you can get like an average of the 5 years, etc. Not just from the case that will tell you whether it's bullish or bearish or whatever, but just because you need to be cognizant of. So when you're starting to see these central banks reviewing companies' debts, if you're going to have a company that's got 150% payout ratio, which is basically means that they've been buying back more shares than the amount of earnings that they've actually been making. So it's very difficult. So I think it's very important to look at the debt structure of companies if you're going to look at them, and also the credit rating of what the rating is. So I mean, if you're looking at a company that has I'm pretty drunk right now, so I'm trying to make sure that I get the rating right. So if you get a triple B rating, which is investment grade, but it's the last level. So you need to really look at. I personally look at the fundamentals of the company, the payout ratio, because that, and also the sector. The sector is going to be really important in this time of the cycle and what everything's going on. To then try and make some sort of judgment of what the probability is of it getting downgraded. Because if you get a stock that's going to get downgraded with its debt, then you're going to see the stock get pummeled somewhat. Maybe not so much now, because the Fed's obviously probably just going to buy the debt anyway. But you definitely need to look at these type of things. So it's really important. So that's the debt market anyway. As we were talking about, yes, the VIX. The VIX is actually really coming down here. So, I mean, this is going to all-time lows since where we at. The low here is 36.24, and what we at now, the low.
Before you move on to the VIX, Jamie, do you ever use Koyfin at all to check the corporate market?
Funnily enough, I actually haven't used Koyfin, but me and a few friends are actually in a few talks to actually have a meeting. So I'll get back to you on that. But I need to have a little look before.
So check.
So tell me more. Tell me.
check this out. I've got the AAA, triple B, and triple C up on my screen here, and you can see a nice little chart. Yeah, you can change it, depending on the time frame you want. Like I put it on the 1 month,
Are
or
you
even
are
the
you
3 month would
presenting that?
probably be a better view. I should be. Let me check YouTube. Yep, yeah, you can see my screen right now.
Okay,
I've
cool.
switched it to me. So you can see that the triple A's and the triple B's seem like they're okay, but the triple
Mhm.
C's are the junk. That's why you see the HYG, the high yield market doing better than the JNK, because
Yeah,
anything that's lower than triple B, or is it lower than double B? I
it's
forget
it's
where
no,
JNK comes in.
so it's investment bonds is triple B below, above, sorry, and then
Okay,
junk
triple B and below.
is
Yeah,
is B.
gotcha. Right. So you can see triple C's are kind of collapsing here. So kind of, it's interesting to get a nice overview of these different corporates and their ratings. Yeah, you're right. The Fed came out and basically said that they're going to support these corporate bonds. They're going to be buying companies through the HYG. And I think we talked about this on Tuesday, but that's why you're seeing things catch bids. Now, what I find really interesting is if you go into the HYG and you look at its holdings, there are like 1,000 companies in here, right? So my question is, if the Fed is actually buying this stuff, can they go right into any of the holdings within this ETF and buy, like if you scroll really far down here, Tesla's at 8% of holdings or something stupid low. Can they actually
Yeah.
go in and buy Tesla? Is my
Okay.
question. Let me just download this.
So basically, they're only buying junk bonds with companies that were downgraded into junk bonds. I can't remember the specific date, but sometime in March. So basically, if they had investment grade bonds before a specific date in March, I can't remember when it was, the exact date, and then it got downgraded to junk, then the Fed will then support those bonds. So basically, they'll only support the companies that had investment graded. Sorry, excuse me, just adding a little bit more whiskey. That was graded before. I mean, just recently. So they won't actually support every single company that's in junk. So it depends. It does
Okay.
depend. I don't exactly know the metrics, but the basic premise is that, to be honest.
So that's for JNK. This is HYG. Tesla's inside HYG, believe it or not. So they're rated high yield.
Yeah, it's similar though. High yield corporate bond is still junk.
Gotcha.
As far as I know.
Well,
So they're
either
just
way,
different ETFs. I don't know what the difference is between them, but yeah, still shit.
all right. So that's your high yield and junk. I mean, look, from a technical perspective, where'd my favorites go? Here we go. All right. So as far as technicals are concerned on the HYG, I mean, if you want to go from a purely technical move, this thing completed a full fib completion. What's the name of this thing? I'm blanking here on the name, but essentially your ABCD, that's what it is. Your harmonic objective actually hit right on the nose if you use these 2 points here. It's pretty impressive and makes sense why this thing's starting to come off at this point. I mean, in your internals, does it make sense to have a technical setup? I don't think so, but I think the point is, and we talked about this on Tuesday, is the Fed actually going in and buying this? And can you trace the money from the Fed into these markets? Or is it simply the announcement that they're buying these things that was enough to drive this higher? And is all of this about to roll over? Like, how much money actually needs to be pumped in to support all these companies if their revenues have gone down substantially? And over the coming months to year, they're going to continue to have a decrease in revenues. So I don't know the answer to that, but I don't actually like playing the HYG or the JNK. I actually like playing the TLT. So this would be basically betting that rates are going to go even further to zero, or towards zero, which I think, what are they at? Like 0.25 or 0.50 right now is, let me see what the Fed funds rate is right now. 0.65 is what the Fed funds rate is as of right now. So basically, if you go long the TLT, you're basically betting that rates will go to zero, which I think at this point, that's a pretty decent bet to be making. So I like to do a lot of options trading. And I think that going long the TLT through options actually makes some sense. And if you go into the options market and take a look at the unusual options activity, it seems like there's a lot of 180 calls being bought or sold, right? You don't know if anyone's buying or selling based on that activity. But nonetheless, from a technical perspective, I like the way that this thing is setting up and has rolled its way up. You can see the nice kind of double bottom setting up here. Hasn't broken completely to the upside just yet, but that's kind of to be expected after the way that this thing's consolidated. This was your massive dump back at the end of March, and now we're rolling up. So uh, I was, I, I guess I'll kind of venture into this for a second, Jamie, if you don't mind, into the Interactive Brokers paper trading platform that I wanted to start using.
Go ahead, buddy.
I don't want to step on your toes. I kind of stole the microphone out of your hands here.
Steal away, sir. I'm happy just listening and just drinking my whiskey. Don't worry about me.
I'm almost finished. My bottle's actually been poured into my glass, and that big triple finger worth of scotch is now maybe a finger left. So if none of this makes sense, I can just blame the scotch, which is perfect.
Yeah. I mean, nobody wants to sue a whiskey company, but if you have to, you just have to.
Right. They didn't put a disclaimer on their bottle that you shouldn't be trading while drinking scotch. So I think I might have a case here. Probably the dumbest case that could be brought in front of a court right now. All right. So let's take a look at some options. So I think if rates are going to come down, it's probably going to happen within the next few months at the latest. So I would feel comfortable playing the June contracts. It may be too far out. You know, if someone's a little more adventurous, you might want to do the May 15th. That gives you what, about 3 weeks worth of time. If you're more of an advanced options trader, you can kind of play around with this and roll it forward. I don't know what the level of mastery of those who are listening as far as options trading goes, but I'm going to, well, let's see the difference. So if you look at the, I don't know if anyone can see this because my screen's usually too big. So maybe I can make this a little bigger.
No, you're looking good, man. You're looking good. I think people can see that.
All right, great.
I mean, I'm on I think a 21-inch big boy over here. But yeah, you look okay on this screen.
Sweet. Okay, thank you. So the 180s are bid 264 asked, 274 for the June. And I would like to look at the May. So let's see how much cheaper these things are. May 180s are 107, 108. So, you know, half the price, you'd be paying double for more theta, or for more time value, essentially. I would almost be inclined to just buy the May 15th here. It's probably crazy play. So, you know, this is more of a, I don't mind losing everything play. You could probably hedge it a little bit or roll it out as it gets closer and closer if it doesn't start to take off in the coming weeks. So just for shits and giggles here, we're going to add this May 180 call to our paper trading platform. And let me just delete these Starbucks here. So we'll be able to track all of these positions that I'm taking here over the course of our podcast history to see how things are going. I think this is pretty cool. So how many would I buy? You know, each contract is $107. So let's see. I've got this paper trading account, which is like $1 million. I mean, I don't really care what the thing's worth, but essentially, right, exactly. I'd be buying these things. I'll probably just buy 10 contracts here. You know, really, it should be 1% of my entire portfolio. So if I wanted to do this right, I should really be buying 100 contracts instead of $1,000 worth. I should be buying $10,000 worth of contracts, which would be 100 contracts. But just for the sake of keeping this easy, and you know, if anybody wants to just follow along in normal numbers, I'm not saying take this position. I mean, if you're going to take this position, you're in for a bad time. But nonetheless, let's see how this goes. I'm going to buy 10 contracts. But because this is a paper trading platform, I actually have to pay the ask to get filled. So I'm going to put this at 107, transmit, and this should hit my account soon. So those are the May 180s. We'll see how that goes as far as what the Fed decides to do. Maybe that's too early. We'll see. We're just playing around for now. So that's my one play as far as, how would you trade something like the Fed intervening in the markets? I don't feel comfortable trying to play HYG or JNK just because it's too unpredictable. You don't really know, is the Fed there? How are they going to support things? It's just too much of a what the fuck for me. So that's kind of my proxy on that play. So with that, should we go into some other ideas to trade on this paper trading platform, or what do you think, Jamie?
It's up to you, man. I don't mind, but I think it's a really good point. The thing is, like at the moment, especially playing with the corporate debt market, is that basically asking for a boxing match with institutions in the world. So I take a trade where you can go the opposite of what is doing, then there's some very big tests. So.
I think you broke up there. I don't know if it was just my connection.
So yeah, you have to be obviously really careful with these things, especially in the market now. So yeah, I mean, market is given everybody. Yeah, can you hear me right now?
I can now. Yeah.
Hello.
Yep, this is better. Can you hear me?
You can hear me right now, yeah?
Hello? Yeah, I can hear you now.
Apologies. Well, yeah, as I was saying, like, yeah, I can hear you all right. Hear me? Hello?
Yep, all good.
Okay, sweet. Yeah, man, as I was saying, I mean, it's difficult to know what is going on with the market, and when you're looking at these type of trades, especially the corporate debt market, where you're kind of having a boxing match with the Fed, it's really difficult to know what to do, especially your risk exposure when you're taking a trade like that where you're looking at the Fed. So man, yeah, it's really difficult market. I mean, as Nathaniel was saying, market is giving everybody trouble. I would not worry, man. Everybody, even the most professional institutions, are all having problems. But as I've written, it's one good thing is that as retail traders, we don't need to trade. These institutions have to trade all the time. They have to allocate their funds somewhere. Whereas we're very fortunate, and if we do feel a little bit on edge or a bit unsure with the amount of uncertainty that's going on, man, there's nothing wrong with just chilling. I mean, a lot of people will tell you that cash is king. So, I mean, for me at the moment, most of my money is in cash, and I'm in no rush until I personally see fundamentals and a little bit more certainty with the virus comes out. Then I will start putting my money where my mouth is. But I mean, what's the rush? I mean, yeah, it's difficult. But I mean, even now you've got the earnings season going on, and you've got to write it off because one, they're getting rid of all their estimates for the year. So you can't take any estimates for the whole year anyway. So then you've got to look at the estimates for the year after. So we're looking at 2020. Where are we now? 2020. So you're looking at 2021. And then for 2021, it's, even that's an uncertainty because this isn't a financial problem. This is a health problem. So this is a virus that's going on. So you don't know how 2021 is going to fare either. And especially consumer behavior, which will change after this is all over. So, yeah, I mean, yeah, that was a bit of a drabble on there. That was a bit of a rant. Was that a rant?
It was a good rant. It was just,
just
dropping knowledge.
Dropping that knowledge bomb. But it's just, there's no rush in this game, especially when the VIX is in its third, 36 at the moment. I mean, just, sit back, watch Donald Trump have a little bit of shenanigans on the TV and just wait until there's more certainty and then strike, do some research on companies that you really like, look at some of the fundamentals, look at the technicals, and then when you feel comfortable to get back in the market, get back in it. There's no rush. I think there might be a little bit of a lag on mine.
No, you're all good. I could hear everything you said. I agree with you. I think that. Can you hear me? Okay.
Sorry. Good. Yeah, I can hear you fine.
Yeah, I would just add that everyone trades a certain way, and Jamie trades his way. And I'm not an old man, but you know how to be conservative, I think, and you have a very thoughtful, logical approach to the market. And a guy like me who is fucking psycho and can't sit on his hands more than a few minutes a day, needs to trade 24/7. I want to hit the market. Like, I want to trade. I'm sitting at home. Like, I want to play the market. So
yeah, we must say though that you've been doing this for many years and you understand. You have really good risk management. So that's one thing. I mean, if anybody is listening, just honestly, just understand your risk management. Get your risk management approach in your process, whatever process that may be, and just really hone in on the different risk models that you can have when looking at your portfolio. Because I know you'll crush it with your risk model. So, I mean, you'll more than happily do it. Whereas, yeah, my ticker can't handle the volatility of trading in a few days and stuff. So I'm like more a little bit further out where I'm like, yes, I'll just sit back and have a whiskey and then we'll see how things go.
No, I feel you. I think it's really important for people to learn how to size their positions according to their portfolio, right? Like if you're trading with $10,000 and you're going to put $5,000 into one position, well, you're an idiot. I mean, you're going to lose your money faster than you can stay afloat for a week, especially in these markets. But, you have to understand that whatever money you put to work in this market, you either need to learn how to hedge that or learn how to size it so you're okay losing the entire position. Whenever you put money to work, regardless of how statistically significant or confident you are in your approach and what percent you think you're going to be right, at the end of the day, you have to understand that there's a good percent you're going to be wrong too, and you have to entertain that idea. Regardless, we don't need to get into that. That's not the scope of this show. I mean, as far as the VIX, brought up a great point. Like, why is the VIX going down here? And I think it's interesting to note that the S&P is getting into levels where people are getting interested in shorting. And the only thing I hear on TV are people talking about how they want to short the market. Well, let me tell you something. If everybody's looking for this market to come down, it ain't coming down. So here's kind of and this is what makes sense. This is why I think the VIX is coming down. First of all, if you look at your fibs, we've gone beyond 61.8. We kind of tagged it, bounced a little bit. It wasn't that impressive, right, on the counter trend rally. If you want to run your fibs, it barely got back to 23.6, which is nothing. So I think we probably come down a little bit more. We're probably running the stops on the VIX for anyone who went long here because they anticipated volatility expanding. I love seeing the volatility come down. And the reason why, and anyone who trades options should know immediately, that it makes your options more affordable to buy. Now, if you're holding long options, then it's not a good thing because then the value of those options contracts a little bit. So I think what's going to happen over the next couple weeks is everyone's going to try to understand, what does it look like for the United States to partially reopen? You've got some stupid articles coming out from Bloomberg saying that Georgia, the governor, opened up the state and some businesses decided to go against the order and stay closed and some decided to open. I don't know why this was an article because some gym owner basically said, the thing that shocked me is 13 people have come in to join in 4 hours. So he's shocked that people joined. I mean, is that, people, yeah, it's shocking. Like, why would you go out to a gym?
I mean, it's all about the gains. Let's be honest. Everybody wants the gains. I mean, superset.
But I guess it is shocking, right? Like, why are new people signing up for the gym, especially in the face of a pandemic? Maybe they've gotten really fat and they're just, I don't know about you, man, but the stores here.
No. That's not it, man. It's not about they've got really fat. It's that they've all left their other halves. And then they've got the gym to look good. So then when they download Tinder, they've then got a really nice profile ready for the next mate. That's what's happening. It's all about that divorce data. It's all about the divorce data.
I think the other reason they may have gone to join the gym is because they're sick of being with their other half and they want to check out some eye candy at the gym.
It's
Anyway,
definitely, man. It's all about that. You wait until you get the data coming out. When that data comes out, that's it. That divorce data. That's where the real estate. You're going to get some bargains.
incredible. I mean, people are either really, really dumb here and they're about to get the second wave underway, or really smart. But that was actually one of my trade ideas, was to short a company like, Planet Fitness. Like, are we really going to see a ton of people go and join these gyms? Anyway, before I finish that, go on to that, let me just quickly talk about my idea in the S&P here, is that I just think we're going to trade sideways. We've got a little bit more upside until that 61.8 retrace at 292. 200 period moving average is sitting at 300. I think we're probably going to trade in a very kind of muddled way. We're just going to get like fucked up action like this, probably into the beginning of May, middle of May. And then once people are like, oh, I don't know if I want to short anymore, that's when this thing's going to come down. And when you see everyone on CNBC like, this is a great buying opportunity, anyone who went to cash in their 401k needs to buy right now. As soon as you see shit like that, or you start hearing people talking about green shoots and all that other nonsense, like, that's when you go short. Right now is not the time. And, it's funny because I think we warned you last time on Tuesday about the USO. Like, do not fucking buy this, I think is what we were saying. So what was this? Tuesday the 21st, we were talking about how this thing was, remember, oil went to shit the bed. Well, this thing's down what? So it was like 337 or so. Well, the high was 340, and then the midpoint was 281. So we're down about 20%, or call it 10%, I guess, since that day. But I wouldn't play this product. I really think this thing's going to explode. But regardless.
Well, this is the thing. It's like, you'll get retail traders and they'll get attracted by the thing that the news are talking about. And they don't, I mean, at the end of the day, I don't even know how many thousand stocks there are in just the US alone. So, I mean, the best thing to do is just download a sheet of every single stock in the US and just come up with your own trade idea. Don't look at the news. Just look at all the data, come up with a good idea, some thesis to do with, let's say, the virus in a few months, who will perform better than expected, for etc., and come up with that way. Like you say, like looking at the USO is basically, it's as if all these institutions are just like, yeah, come here, retail traders, let's take your money. Like, there's just no need. There's no need.
Yeah, I agree. I mean, the USO here is one of the top ETFs purchased on Robinhood. Saw a 300% increase in ownership month over month.
Not surprised. It's just fucking mental. Like, it's like, fuck's sake. Like, it's such a shame. Like, I mean, the fact that you're even trading on Robinhood is the first no-no. I mean, didn't it get like, wasn't this like, didn't they have problems with it like a month ago where it was, when the market got really volatile, it was like shut down, yet you're still going to trade on it? Like, what are you thinking? Look for a professional platform.
If you go on Reddit and read some of the horror stories from people, it's like they're suing Robinhood and they're settling with them. It's fun.
I wish I could find these people just so I could just be like, right, this is how to do it, or at least how I think you should do it. Use a professional platform, and then we'll teach you. Like, it's such a shame.
It is. So I really like trading things as volatility goes down. I mean, where could I see the VIX settling? I mean, if we do go through another week of sideways, I could see us going below 30. That would make sense. 78.6, nice gap here, right around 20, call it 27.5 to 28. That could be an interesting area. Now, if we get all the way down here, then you better bet your left nut that people are going to be scared shitless to go short. But you have to remember, the market is going to trade in a way that impacts the most amount of people to lose as much money as possible. So would it surprise me if we came sub 20? Probably a little bit. I would be a little surprised at that point and wonder what kind of long-term implications we had to get the stock market to settle down to that point. But as far as trade ideas are concerned, I think it's a good idea to just wait on your options trades. I'm waiting to take new positions other than the ones that I already have, which again are going to suffer contraction because implied volatility and Vega contraction is going to start hitting some of my positions. So things like that TLT position that we put on, that'll go down in value if this thing doesn't start taking off to the upside. But it's interesting. You can see the 10-year volatility index is also coming back down into a level as well. This is the Treasury volatility index. That same gap that's on the VIX is right here at about maybe 10% lower from where we are right now. Maybe we need to look at this thing to see when the market's going to bottom. I've been paying attention to this lately because it's kind of been interesting to follow. So maybe keep this on your radar too. It's going to be separate than your VIX, but nonetheless, it's a measure of that 10-year U.S. Treasury. So trade ideas, if you're playing options, I think the market's going to settle down. You're going to get better prices. But some of the ideas that I was playing around with, included Starbucks. I think that shorting Starbucks makes sense. Like basically, your companies that rely on foot traffic and people to just hang out in your place make the most sense for me to fire off some puts. Starbucks' earnings are coming out soon. I thought they were pushing these back, but I was entertaining the $75 puts out to, hang on, let me put this in here. So again, I wouldn't be taking these positions, and we're probably going to update them next week. So I'm just going to toss them in here just to track them, and we'll update the positions next week and actually take them for real once the volatility comes down a bit more. So Starbucks $75 puts is what I was looking at. I was looking into the June monthly expiration, so that's the June 19th, and I was going to play I think I was going for the $70 puts. So these are trading at 315, 330. So I, of course, have to buy the ask and then change this to 10. Did this actually come in here? Huh. Buy 10. All right, so that was there. And then, this is an old position. That's why it's still active. So then I need to delete the other one. So let's just track the $70 puts on Starbucks. And then the other ones that I was... What's that?
Sorry, before you go on to another stock. So with Starbucks, you've got their earnings call comes out on the 28th. So it'll be interesting to see what their data is regarding China, to see how they're getting on in China. I mean, they won't be able to give you obviously the full quarterly results with China. Well, they will, but they'll be able, I'm sure the analysts will be asking questions of what the revenue is like in China over the last couple of weeks. So I'll have a look at that for you and have a look, see what's going on. I think that'll be a good thing to be looking at.
Yeah, I like this name. I like shorting it. I liked shorting it when you and I were talking back in February. And
yeah, man, I used it as a spread trade. So I was long looking coffee and I shorted Starbucks. That ended up being really good. I'm glad it wasn't. And then what you had to, if you look at Looking Coffee now, though, man, if you've seen Looking Coffee, so basically, what's the name of the firm? Muddy Waters. So Muddy Waters are a famous company that basically look at Chinese companies. They then get people undercover in China to have a look at it, to see if their data is all bullshit. And they called bullshit, and they came out with something like a 60-page document saying that Looking Coffee were lying on all their metrics. And the stock just tanked, basically. Because, I mean, when Muddy Waters came out with it, I think it was around the $40 level. Fortunately, I was back in the day when it was like $12 or something. So I had some fun.
We talked about this in February, right?
Yeah, back in the day. It's probably one of my best ones of last year, last year. I can't remember where is that? Like, I think pretty sure it was last year in November.
Wow. Yeah, that was a crazy story. I mean, go look it up. I can't believe this thing gapped lower 3 days ago. Am I on a daily chart? Oh, this thing's just shut down.
Is it completely shut down now? Because they were being investigated again by the Chinese authorities after when Muddy Waters came out with the report.
The last time this thing traded was April 6th.
What was the price?
Wow.
That would be short.
That would have been I didn't take the position, but we're like, oh, we should short this thing. And I was like, yeah, this looks like a great short. And of course, we didn't take it.
It's nice because Muddy Waters, I remember reading them on a documentary, and that's literally all they do. They just look at Chinese stocks predominantly, and then they just get people to cover there, and then see how they get, and then basically try and call bullshit on it, which happens to a lot of the Chinese stocks. So yeah, quite a nice little firm to look at.
For sure, for sure. One of the other things that I was looking at was materials and like construction and industry, like a company like Caterpillar. I think that the U.S. is going to start opening up construction jobs again.
Yeah.
So I think that may actually be an interesting play. So a company like Caterpillar right now is tracking the S&P actually not as well as I would have expected. I actually like the idea of going long a company like this. So if you were to take something like Caterpillar and draw your fib extensions, and even draw your retracements to see where this thing came into, I mean, this thing hit 50% and it's bouncing. Like, I actually think this is a great trade idea for right now. In fact, I'm going to price this thing out right now. This is a real trade that I would take. If we can get off this call. Actually, I'm not trading because I'm fucked up.
Stop it. Yeah, exactly. I mean, I think one of the things to look at when it does come to Caterpillar as well is just seeing how they're getting on with exports more than anything, because I think you're looking at around 25%. So 48% of their revenue is North American. So the other 52%, it will be interesting to see how they're able to export all the products. If they're able to pretty easy, it'll be interesting to see what their supply chain is like and whether they can actually export it pretty easy. But you're looking at Asia Pacific is around 24% of revenue. So
is there a risk in taking this position if you've kind of got the idea that with this proliferation of the pandemic, that the deglobalization trade is going to inhibit Caterpillar's earnings because they're not going to make money from sending their shit outside of the United States? Is that kind of the risk to this trade?
I mean, it depends on how the revenue's all taken up. So from quick glance of looking at the what the hell do you call it? Whatever report they announce. So you're looking at around 35% is construction. Energy and transportation is around 40%, and then resource industries is 18%. So it'd be interesting to see how much of the real estate, manufacturing, of the construction industries within America, to see how much their revenue is within the construction part, since that's the highest amount of revenue that they have as part of their earnings. So, and it's just difficult without listening to an earnings call or looking at more updated details. It's difficult to know on a fundamental level. But it's a great fucking idea, because, I mean, what expiration dates are you looking at?
I would be playing June. I think this thing starts rolling sooner rather than later as people start to realize, all right, if construction's opening back up, jobs are going to start, money's flowing into these businesses, and they have jobs to do. So the question is, are they working on old money, or is new money going to flow in for new projects? I think if you open up the industry, whether or not you've got that cash flow, it's going to be bullish for the stock, because people are going to be placing orders, assuming that, that 48% that you said in North America is getting going, that things are going to start rolling for this company. And you know what? My fundamental analysis, I just made up, right? That's just my personal opinion on how this would unfold. But from a technical perspective, I mean, I like the way that this thing hit that 50% level and paused, and it seems like it's trying to roll back up again. You've got your OBV, volume is starting to come back in. Nothing confirmed just yet. If you want to wait a couple of days to get in on this, I'm not opposed to that, but I actually like taking the 120 June monthly calls. They're a little expensive just, at 495, bid 480, 495, you could probably get filled at like 487 and a half maybe, but I'm going to send in, I'm going to buy 10 contracts again. I should really be sizing this according to a real portfolio. I'll work on doing that next week. Maybe
what is the construction industry doing in America at the moment? So, for example, in the UK, you're starting to get the quite a few of the home building companies starting to reopen at the start of May. Is America doing the same? Do you know, or does
Yeah,
it depend on state by state?
good question. It is state by state, and actually most states are planning on reopening construction in the beginning of May. So that's like there's 3 phases to reopening the United States, and each governor has kind of taken it upon themselves to take the plan of the president and adopt it as their own plan and as to how they're going to roll out each phase. And regardless of each individual state, it seems they've all come to consensus that phase 1 involves opening up construction again. So I like this play because of that. So I'm going to buy,
Nice
10.
idea, man.
We'll see. It could be a great idea, or this thing could just flop because everyone's like, oh, you want to build construction and real estate. Well, I've got some counter arguments against the position I took. So you should listen to these before you take the position. The first is, who's going to go out and buy new construction of a home? Nobody, people are anxious about the value of their portfolios, anxious about, is real estate going to go down? The other issue is, how long is that piece of construction going to sit on the market before it's purchased again? What interest rate? Theoretically, they should be really low and that shouldn't matter. But from what I've heard, it's really hard for consumers to get mortgages right now. So from the personal real estate side, there's risk on that from what I just mentioned. The second part would be construction of office or retail space. Is that a lot of people are now realizing that they can run their businesses with their employees working at home without a problem. And what that means is companies are not going to want to pay for the office space that they had before. So building new skyscrapers or retail spaces for office buildings, I think that's done. And I think a lot of companies that are online and do retail, they're going to realize, we did just fine through this. We were still able to sell merchandise. I don't know if retail company, we've already seen a decline in the brick and mortar stores. Just, in the past few years, there's been a noticeable decline in the revenue streams from brick and mortar. I think that craters that kind of demand even more so and transitions us more digitally for our shopping and our retail needs. So that's the counter argument to this position. Now, of course, there are going to be construction jobs that need to be built, things that need to be repaired, things that need to be torn down, and that's equipment that Caterpillar sells. I don't know enough about this company fundamentally to understand not only their sales of that equipment, but also the necessity for that equipment around the country. That's a fundamental analysis that I'm just not smart enough to do. So, that's up to you to take. Now, for a short-term options play, I'm going to put $4,800 on this through this paper trading account. I mean, if it works, it works. If it doesn't, I can hedge this thing out by selling some, or even buying puts on this if I wanted to hedge this, or sorry, rather, I would actually sell some calls. So if I wanted to hedge this out, what I would probably do is sell the 140 call, which is a higher strike. So let me actually do that to hedge this, just to simulate a real position here. So where's the...
You're looking all right on the debt front as well. So Caterpillar has, it looks like the debt structure is around A. So you're all right on the debt front.
Oh, that's great.
Earnings call again is on the 28th. So you've got your work cut in on the 28th, mate. You've got plenty of earnings call to get in on.
Right. So, I mean, I could sell a really far out of the money call at 140, which is actually above this gap here. I mean, if I really, if I wanted to sell the 135s, I could pocket $108 per contract and make this outlay only $300 per contract. Let's just do that. I'm going to sell the 108 calls here and change this to sell and transmit update. Oop, did this work? Sell, 1 day limit, cost basis. This is wrong. Let's go to here. Oh, I have the 120s. That's why. Got to delete that and then put in. How do I insert? Oh, I see. I'm kind of new to interactive brokers, so bear with me here. Anyway, so CAT, I'm going to sell the 140. I said 135 calls, so let's put that in here. I bought the 135 calls. Oh man, I think I'm getting too fucked up here. What did I just do? I thought I bought the 125s. Yeah, so I bought the 125s. Here's that. 125 calls. I'm like losing track of my own train of thought here. Sorry, guys. 125 calls. Let's separate this out so it's easier to see. Buying these at the ask. Buy 10 of these. Make sure I transmit this. Here we go. So this is official. And then I want to sell the 135s. So I'm going to pocket according to the bid, it's a $101 credit per contract. And I want to do 10 to hedge this out. So transmit. So both of these should be live now. And therefore, the cost of going long this thing is really going to cost me $200 per contract, $204 per contract. And that way I've essentially hedged the position partially. So we'll see what happens here. All right, so that's my Caterpillar trade. How long are we on this broadcast now? Are you still there, Jamie? Oh, he's put himself on mute.
Yeah, I think we've done about an hour? I honestly can't remember when we started it because we were drinking whiskey for the first 40 minutes.
I really wanted to get to gold and silver trades. There was also a tanker trade. You know what? Give me 5 minutes and let me just breeze through this real quick. Do you mind?
Yeah, no worries. We've got about 13 minutes. I've just whacked a pizza on, so I can't wait. I'm just going to demolish it. I'm the biggest sad thing of not only the markets but the world is I've run out of whiskey. I've got no more whiskey.
Yeah, me too. This is my last bottle.
I'm gutted. I'm just hoping that I'll be able to order some online. I'll get a couple of bottles this time just in case. So
I was thinking about getting some bourbon actually.
Yeah, funnily enough, we were watching some series of some chefs, and they were talking about Texas bourbon whiskey, and apparently it's supposed to be really good. So maybe I should get on the bourbon hype.
If you've never enjoyed a good bourbon, I would say the easiest one to get in is Bullet. If you like bourbon, that's a good starting point.
Man, honestly, I'd probably. Do you get smoky bourbons? I don't know. I always drink Scotch, so.
Oh, so you like peaty scotches then?
Yeah, I love my Scotch, man.
I love peaty Scotch as well. I don't know about smoky bourbon, but I think we've kind of digressed here, haven't we?
Oh yeah, sorry. Markets, not whiskey. Long Jack Daniels. Is Jack Daniels even listed? Yeah. On the gold front, it's difficult. I don't know what your view is on gold, but my view is, in general, we had what we were talking about the was it Bank of America trader or Bank of America was saying that
there was an article from them.
$3,000. I don't know what the projection was. Was that for the next couple of months, or was that the next few? Was that for the year, or was that next year? I'll have a look. I'll have a quick look.
No, you know what? You do your analysis. I'll find the article.
Man, to be honest, my analysis on gold, I didn't really have much analysis on gold. It doesn't move enough for me in order to do analysis on. It's like a tortoise. I prefer to do my analysis on stocks since I can get a better look. Say if you're going to go and if you're not in already, then obviously I wouldn't buy here anyway. I think the one thing maybe to look out for is if we start getting a spike in the volatility, then we might see gold moving. But the thing is that when volatility's been high within the markets, then you've had basically everything just correlate to one, basically meaning that every single asset, whether you're gold, whether you're a stock, whether you're Bitcoin, has basically just followed the S&P. So I don't know. It's a difficult one for me. I mean, it's that whole inflation deflation argument that everyone likes to have. Coming from inflation deflation, me personally, I think if we're looking at the next few months or the next 6 months to a year, I personally think we'll get more deflation than inflation, just from the fact that at the moment you're going to have a lot of companies that are going to have a higher inventories, and that's something that, of course, if you're looking at companies, Caterpillar will be a great one to look at when it comes to inventories. We could probably have a look at that in a minute, actually, and have a look at their inventories, but inventories will be a great indicator to know whether you're going to get more deflation over the next couple of years. I mean, we can't deny the fact that the world's been on lockdown, but some factories have still stayed open. I mean, I have family members who work in even the titanium industry, and they're just producing things as if it's a standard Monday or a standard Friday, and they're just producing loads of titanium and stuff, wings for aeroplanes, etc. But I mean, I don't know about you, but I haven't seen any aeroplanes in the air. So I mean, I personally think that you're going to get more deflation than inflation. Now, that's, I think, is for 6 to 12 months. Longer term, then it really does depend on what the steps that the Fed takes further. Inflation is possible, but there's also another call for stagflation as well. So it's really difficult. I mean, personally, I have a small percentage in gold and silver. Is it enough to move my portfolio? Maybe a little bit, but only, maybe 10% max is what I put in. But that's just to cover against the dollar. And then if I am going to cover myself against the dollar and for the dollar to weaken, well, isn't that why we all have Bitcoin anyway?
Huh. I would actually make the addition to your statement about inflation that gold will perform well even in a deflationary period here, which I think we're going to enter into in the short term.
Yeah, I think I mean, deflation is bound to happen. I mean, with inventories piling up, people can't really send things anywhere. So you're going to get these massive stocks. I mean, especially when you've got oil down to the prices that we're at the moment. How can you have inflation when you've got oil down to, well, giving it away? It's just literally can't happen. So, yeah, I mean, maybe we'll start seeing, what we started seeing it in 2009, was it? In 2009, 2010, when we started seeing gold decouple and then we started going up a lot further. I mean, this is a very different environment, of course, compared to the last cycle because, compared to the last crisis, at least, simply because you've got companies on lockdown. So I don't know, man. It's really difficult. I don't know. You're the gold bug, so I'll leave you to do the analysis on that one. I'll leave you to put your call on the line, sir.
I think you're spot on here. I think it's great that you put 10% of your portfolio into gold. I think that's brilliant. And I've been actually telling my friends that, hey, if you're really concerned about the world going to shit, that you need to own 3 to 10% of your net worth into gold. And I said that it's best that you own the physical because there's risk in owning the paper market. If you're going to own the GLD, if you're going to own the paper rights to the futures market. I mean, the reason why anyone who's interested in gold should at least know that the spot market and the futures market blew out, and that was a result of inventories being fucked in London. The LBMA bars, the 400-ounce bars were not able to be delivered, mainly because people couldn't get to work or into the warehouses to deliver them, and it caused everything to blow out and get fucked up. Well, here's the problem with owning the paper is that you own a right to a physical piece of metal, and if you have to take delivery, it's extremely complicated. There's taxes involved. The amount of paper may not actually be backed by the amount of gold. I mean, all of that stuff, with that in mind and with all that behind us, why wouldn't you own the physical? I mean, unless you're lazy or have no place to store it that's secure and you live in a cardboard box, or you're worried about your significant other taking your gold bar and melting it into a necklace or a dildo. I don't know what, whatever it is. I mean, you got to own the physical, long story short. I think in the short term, if you're a trader, you have to look at things like the US dollar and gold. I think that the correlation US dollar up, gold down, US dollar down, gold up is no longer going to be as predictable as it used to be in the past, mainly because of what's happened with the Fed and the amount of money they've printed, inflation, deflation, world going to shit, you name it. Gold is the asset to own because of all of this crap. Now, short term, gold looks a little heavy. It failed to really break out today. I don't necessarily think that gold's going to go back down to its old lows, with the caveat that if there is an S&P sell-off, if you see the broader market sell off considerably, you have risk with the same thing that happened to the USO, the ETF, the paper contracts to those oil barrels. You're going to see the same thing happen to the gold market. Gold will sell off with the rest of the market, just like crypto and everything else we sold. I don't think that's happening within the next few weeks. It may, but my conviction is that gold will trade sideways to down. I would be surprised if we got below 1600. I mean, yeah, you can take a daily chart and do your fancy squiggly line theory here and see that 61.8 is at 1580 and your Bollinger Bands are sitting at 1590. You got a nice gap here at 1580. Well, guess what, guys? If gold does go down to those levels, you ain't going to be able to buy physical at anywhere close to those levels. Right now, if you're listening to me for the first time, I'm a rare coin dealer. I do a lot in the wholesale market with rare gold and silver or even bullion. I cannot buy an ounce of gold for anything less than $100 over melt. I mean, wholesale, I might be able to get it. What's that?
Damn.
Yeah, so things are expensive right now. And if it goes down to 1580, you're probably not going to be able to buy it for much less than 1700. Even when gold was trading down at 1450, the premium was still $100, and we're still trading at that $100 premium. I mean, there's definitely demand for this shit. People want it. People are afraid of owning dollars. If you have a lot of cash in the bank, do yourself a favor. I definitely did myself a favor and put more of my cash in, and I got some friends to do it as well. I mean, the downside here is just the paper market. So long story short, you should at least own some portion of gold. I don't care who you are or what you think about commodity cycles or whatever bullshit you believe in. If you don't think gold's going up, do yourself a favor and just put 3% of your net worth into it. And of course, do the opposite of what I said. So I could be completely wrong and you're an idiot for listening to me, your typical disclaimer stuff. But nonetheless,
I think that's the whole point, though, is like, gold is kind of, the way I see it is gold is similar to having Bitcoin. Like gold's a good one against the dollar, and then Bitcoin's a good hedge to have against the whole financial system. So
I would
it's
say gold's the
like
same
you said,
thing to hedge
would you,
against the
would
whole
you?
financial system.
I honestly don't, I honestly think that would, if not, gold would maybe be more correlated to, say, the traditional markets than you would that Bitcoin would with everything else. I don't know. It's difficult to know, but I think it's just the key thing with diversification, isn't it? Especially in this type of environment, you can't not have at least a little bit of gold in this environment. I mean, it's a safe haven at the end of the day. So yeah, you're completely right, man. You've got to have something, at least some sort of allocation in hard commodities.
Yeah, and if you want to trade this thing, there's a couple of different ways to trade it. I wouldn't actually be going long at these points. I think it makes sense to wait for a little bit of a pullback in the paper market. And remember, if there's a sell-off, your paper contracts are going to get crushed. So if you're trading this, you're a pure speculator. You're just trying to mess around to make a few bucks on the upside. Now, you could play other things like the miners. You've got the GDXJ. Oh, give me a break. This is going to happen again. GDXJ. Oh, I typed it in wrong. I'm an idiot. All right. I mean, it's kind of hard to go long in these levels, right? You draw your fibs and you can see we're way beyond 78.6. So it's pretty hard to come up with long ideas. Yeah, sure, you could put on calls and buy like a $45 call, expecting this thing to roll up and move higher, but I'm expecting the markets to just kind of trade sideways here over the next couple of weeks. I think it might make sense to just wait. Yeah, we've completed a measured move here to the upside. ABCD is right where we've pulled back at. I can't really be really excited about taking positions here. Oops, where's Barrick? Barrick Gold, new highs, coming up on levels that, I mean, you can't chase here. That's the problem. Things like, what are some of the old other gold miners? There's Barrick, and then there's, well, there's all these stupid names. I would just leave it for now. I think that, Kinross is another one that I was looking at. All these are continuing to make new highs. The one thing that I do think is tradable is the SLV. We're looking at things to pull back on the gold market. I think the silver market will pull back too. I love trading the silver market just because of how cheap it is to get in on these things. I think eventually silver will, I don't think it will catch up to gold on a dollar for dollar basis. Or, if you look at the, what is it, the gold silver ratio, where is it? It's like gold silver. This thing's at crazy numbers. I mean, it used to be at 125. Now we're rolling up to 113. I think that silver has some catching up to do, or gold has some selling off to do, where silver catches up. I'm not sure which one that is, but I'm a little bit hesitant to take positions on silver right here, just because we can see the other commodities start to be vulnerable to the downside. If you don't own any gold or any silver, you got to take a little bit of a piece at these levels, because there's a good chance that silver just does this, where it, we rose up to 1480 down from 1086. We dipped not even to 38.2. And this is just the beginning of silver starting to roll back up to the retesting its highs, or even going further than that. So if you want to start wetting your toes in the market, maybe it makes sense to buy the $15 calls out to just May. Let's see what those are pricing out at real quickly here. Let's do the SLV. This is going to be a pain in the ass for me, isn't it? Find, really? Here we go. All right, so silver, we're going to do the May monthly chart, May monthlies. I mean, look at this. A $15 call is going to cost you 31 bucks. So in order to break even, you've got to get to 1531. So obviously that means new highs. And if this thing gets to 61.8, you're basically tripling the position, doubling the position, right? So 1531 is your break even. This thing will be worth 98 cents. You're paying 31. So yeah, I guess you are tripling the position here. You're paying 31 cents. You'll make 67 cents to the upside. It's not a bad return, but you're basically betting that silver will continue to roll its way up. I don't know if that's a good play into May. I'm a little hesitant to take that position just yet, just because I want to see what happens in the next week. The paycheck protection plans are being funded. There's more money flowing into these markets from the government. I think it's going to be more sideways consolidation. Your intrinsic, your applied volatility is at 43.6%. I think things can go a little bit lower. You looked at the VIX, it dropped to 36. There's more downside for that. I think, it makes sense to maybe buy a few contracts if you want here, and then continue to add to the position as we go forward. That wouldn't be the worst idea in the world. You can hedge out the position in different ways. We can entertain those next week. But I think it's a good idea to start thinking about how you want to participate in the commodity markets, specifically in gold and silver, and even platinum and palladium. Those are other markets you can play in. And then, of course, there's copper. I like companies like Southern Copper, and then even uranium is a crazy play right now. I don't know if I would consider that commodity, but more so an energy stock. People are really excited about this uranium participation unit. Those are those hedge fund guys. They're obsessed with this. And if you listen to the podcast, this is something that everyone's a big fan of. Where is this thing? Uranium participation. I mean, this thing just keeps rolling higher. People are going to need uranium over time. If you don't, if you are interested in uranium, you probably already know about the podcast to listen to. But if you don't, reach out to me. I'm happy to share that information with you. So those are your gold, silver, copper, platinum. I haven't actually looked at platinum. This one, from my business perspective, has not performed as well as gold and silver. I think platinum is dirt cheap right now, but I think it has the same risk to the downside as gold and silver do. All right, I just went on for way too long. I'm sorry if I put you to sleep, Jamie. I hope you're okay over
No,
there.
no. Honestly, I'm munching on a pizza right now. You're doing great.
I think we need to cover crypto before we sign off.
Yeah. Cover away.
All right, I'll let you stuff your face. Is it a frozen pizza or did you make? Because again, we don't have any flour or sugar or any of that shit here in the U.S. because we're a bunch of fatties and we bake when we're depressed and scared. So I cannot find a bag of flour or a bag of sugar if my life depended on it. But if I wanted toilet
Really?
paper, yeah, it's just as in
That's
demand as toilet
shocking.
paper.
I mean, we had a bad, let's say, 10 days, but then after 10 days, everything's fully stocked here. Like you'll find toilet paper, no problem. You'll find flour, eggs. Yeah, no problem here.
Wow, you're lucky, man. I mean, nobody's giving up their flour because they need to bake their cakes. So it's become for the pizza situation. I've had to make my own dough because none of the stores are selling fresh dough anymore.
Oh, really? No, I just bought a supermarket bought pizza. I'm too lazy for that life.
Dude, I've been cooking some crazy shit over the last few weeks since we've been here. I made lamb ribs. I made baby back ribs. I made a short rib in the instant pot. I've made poke bowls, sushi, steaks.
Nice.
I made a white bean shakshuka the other day. It was like nothing else to do but cook. And I made dough
I think
from
my other half
scratch.
isn't listening to this because otherwise she's going to file for a divorce and I'll be part of the data. All I've done is like a liver and bacon, and that's about it.
Well, good for you. I mean, you know what? Whatever. Do what makes you happy. If you don't want to cook, you don't have, don't. It's a lot of work, and you got to clean up and get ingredients. It's a pain in the ass.
I like my cooking, but for the weekend. In the week, I'm too busy.
I feel you, man. All right, should we get into the crypto situation? Because I think it's going to be pretty simple. I think I saw you tweet out about HUD 8, and good on you for stopping yourself out on that position.
Yeah. Honestly, so, I mean, pretty simple, to be honest. Yesterday, obviously, I was at my laptop as I usually am for most of the day. Should I, you can pop up HUD 8 on your chart if you don't mind. Makes it easier. No transition necessary.
Okay.
But yeah, go on.
I've got your screen up.
Oh, have you? Am I present? I'm presenting. Oh, well, in that case, well, I'll move on then. So yeah, I mean, yeah, pretty simple from my point of view. I mean, I'm at my laptop all day as I usually am, and then obviously we saw the move up from Bitcoin yesterday, and I actually took profits on HUTs anywhere between 110 to 95, and then I don't know what happened to me yesterday. Some sort of somebody came over to me and went, FOMO, Jamie, FOMO. So I ended up actually buying some yesterday of this HUT 8. So I ended up buying back. Now, it was clearly a FOMO pay. And then today, even before I was like, yeah, I'm not feeling comfortable regardless. So I ended up selling at a 5% loss of that actual trade. Only a tiny bit of the portfolio, so it's not too bad. So, but yeah, I was quite annoyed at myself, if anything, because I mean, it was quite a good position regardless. Before I took some good profits, and then yesterday, we saw obviously Bitcoin move up quite a bit. But yeah, it was all emotional, and it was just stupid, to be honest. So I got out on like a 5% loss, I think. So I think it works out like 0.5% of the portfolio. So not terrible, but still really annoyed to the fact that I had to take that loss, to be honest. So, yeah, I mean, especially when you're coming into a weekend and with all the volatility that's going on, the uncertainty, you only need something bad to come out over the weekend. And then if the if the US market goes down on the Monday, then you're going to see Bitcoin follow. Unfortunately, that's just the way it works at the moment. So, yeah. Probably not my best days, but at the end of the day, it could be a lot worse, and I could still be holding it now, and you never know where it could go. I mean, it could go back up, and then I made the wrong decision, but if I don't feel comfortable, and I've just got to follow my setup, and, it broke the lows of 90, I think it was 94. So, yeah, just got to take it on the head, move on.
You know what? That's a sign of a professional trader. I hope you got out your journal and you put down how you were feeling about the whole thing and you learned from your mistakes, sir.
Yeah, I just got into the shower, put on the cold tap, and started crying for 15 minutes. That's my journal.
Hey, you know what? If that's what helps you, whenever you get stopped out and you need to go in the shower and cry it out, good for you. When you start your hedge fund, make sure there's a shower right next to your desk. With
Hopefully, I won't make
scotch.
that many. Hopefully, I won't make that many bad trades. But if I
Oh,
do, then
there will
I'll,
always be bad trades for sure.
yeah, yeah, without a doubt. I've made more than a few in my life. Plenty, all the time.
So yeah, I mean, crypto's in a weird place right now. It rallied kind of, it rallied strongly. There's no doubt about it. The
Yeah, yeah.
bearishness that presented itself in the market was invalidated by this sharp move. Oh, actually, let me present my screen. I'm going to get better at this every time. I feel like this was so far our best show when it comes to me being the idiot monkey behind the screens.
Man, personally, even though we're about quarter of a bottle of whiskey in, I think we've nailed it tonight. Like, I mean,
Until we
maybe
listen
it's the
to it
whiskey
again.
that's yeah. Maybe it is the whiskey that's talking, but still, it's all good.
I'm having a great time. I don't care, if you're still listening to us and you're like, when would these guys stop listening, talking? First of all, why are you still listening to us if you don't want to? And second of all, I think we've had fun, and that's what matters most, is that this is really about just you and me shooting the shit, talking about what we see in the market. You're seeing how I'm playing the market. I'm seeing how you play the market. People are just getting some insight into us. And we're just two idiots that like to speculate. And it's fun. And that's all there is to it. So, I mean, going into the
May
crypto
continue.
market, yeah, exactly. So going into the market here, looking at Ethereum, I trade Ethereum a lot. Uh, I'm really just taking the highs of this market at 288 from the end of February to the lows in the middle of March, drawing my fibs. We haven't quite rolled up to the 61.8 level. We did tag 50%, put in these kind of inside bars to the downside. If you're a technical trader, this might have forced you out of the position. You saw this ominous sign come in, but then the 13 EMA came and supported price, so then you got fucked out of the position. And then yesterday you saw this move to new highs. So you're like, oh God, I'm so dumb for closing it out. I had my stops, I rolled them up, I got stopped out. And then the market goes and makes new highs. And then you're just like, what the you're basically caught in no man's land after that. And that's kind of the problem with a lot of these technical setups, is that if you don't understand the market mentality and psychology of the way this thing works, you're not gonna trade well. I mean, nonetheless, you probably booked good profit if you were able to go long from these double bottoms down here, but you missed a good amount by getting stopped out here. It just depends on your trading plan and how you played this market. But just simple technical trading gets a little bit complicated if you don't have a nice way of playing a bull market. I think the hardest part for me is trading bull markets. Bear markets are easy. They just the shit hits the fan, it sells off like a mofo. You book your profits and you're done in like a day at most. Bull markets, you get all this bullshit. It goes, oh, I'm going up. No, I'm going down. No, I'm going up. No, I'm going down. And it's like, there's so many different ways to get, pushed out of your position that it's hard to stay long if you don't have a good bull market trading plan. And you know what? Even the good ones don't work out. I've tried readjusting my bull market trading plans based on what happened during the last crazy bull run in 2017, 2018. You know what? Still wasn't good enough. I actually got stopped out on my longs down here just because, you roll up your stops and you're like, I don't want to be in this position. But that's what the market knows. It's like, oh, you know what? This idiot's fucking rolling up his stops. Let's stop him out. It just happens to the best of us and the worst of us. It's just a part of trading, and you have to understand why that happened moving forward. So without the gibberish going forward, you take your ABCDs. You can see 61.8 of that fib extension is sitting at $200. 61.8 of the entire fib retracement of the high and low is at 213. I am inclined to believe that we have to complete a portion of this extension. The volume profile here is looking very ripe for that 210 level, but I think it's going to be tough trading going into the weekend. If you look at your RSI, we're kind of getting into overbought territory. It's just not a great place to be going long. And, Jamie's a smart guy for stopping himself out, because this thing could do an FU and kind of shake him out in ways that he would lose a lot of his position just from a quick up and down movement. I think the weekend's going to be sideways to up. It was interesting. If you drill back down into the hourly chart on Ethereum, you can see these big tails came in. And that to me is a sign of bullishness going forward. Now, the real tell is going to be what happens around 9, 10 o'clock Eastern on Friday night. That seems to be when they want to move the market the most. I don't know who the fuck is messing around here. Maybe some drunk Wall Street traders are stuck at home with their wives, and they're drunk as shit, and they're just like, let's fuck around with some crypto kids, and they just run the stops or push the market higher. But if you go back and look at the last few weeks, you'll see the market moved over the weekend. Looking at Bitcoin, it's pretty much the same thing. Look at the daily chart just to get yourself a nice position oriented around the position. Is that Bitcoin got really close to the 61.8 and isn't expressing the same overbought conditions in the RSI as Ethereum is. So I think that, Bitcoin is pushing up the market. Ethereum is kind of following along. I think there was some fundamental news with Ethereum that they came out with their 2.0 testnet was a success, and they plan on launching that in the future. Great. I don't really care about the fundamentals of these markets just yet. I don't think those come into play until we see the nonsense in the broader market play itself out. But nonetheless, ABCDs on Bitcoin, again, the last time you heard from us was on Tuesday when we were talking about the downside targets on Bitcoin. We're contingent upon the broader market selling off. We haven't gotten that broader market sell-off. So it seems like sideways action in the equity market is bullish for the crypto market and Bitcoin specifically. So actually, this is probably too optimistic. I should really be using this level here. So it looks like $9,000 would probably be my target. I like testing these highs before shit starts hitting the fan. If we can even get that high, 200 period moving average on the daily is sitting at 8,000. If you're not already long, it's a hard place to take positions here. I think that you're going to see a lot of turbulence in this market after this weekend or into this weekend. It's tough trading. I don't think there's a conviction for me for a long side or short side position. We have to wait till Tuesday or Wednesday of next week to really get a nice signal, long or short. If this thing does blow up over the weekend and blast through this 200 period moving average, then you've got a good chance at testing this $9,000 level. But for now, I'm kind of in the inclination that this is sort of your bear market rally, and this market will be pushed down as the equity market sells off. If we don't get that sell-off, then you have to remember you've got the halvening coming in on Bitcoin, and that may push this market in a direction to the upside that not a lot of people have prepared for. I think it would be interesting to see the short side interest in these markets. If a majority of traders are caught short, which a lot were liquidated earlier this week, then this will continue to move higher. Just remember, consensus view on these markets through traders' positions, the opposite will most likely happen through these coming days. So if the majority of traders are long going into the weekend, they're going to flush the longs and go short. You can get that data from BitMEX. You can look at things like skew.com. Let me see if I can actually transfer this window really quickly here. Where the frick is it? Here it is. So it's skew. Come on. So I've got the Ethereum market up here. Let me just switch this to Bitcoin futures and take a look at, so open interest is, coming down pretty hard here. Got OKX really high, aggregated daily volume, not quite retesting those April 16th levels. Open interest seems to be on the decline. Perpetual swaps, taking a look at levels. I mean, it's definitely upswinging, but that's not so helpful. Annualized, where's this thing? 3-month swaps, BTC, percent, OI. Liquidations, you can see a big liquidation happened this morning at 135 as we moved higher. Open interest is actually rolling up here. Daily volume is coming in. So the question, oh, this is on the CME. That's interesting. So Wall Street is definitely, wow. You see this, Jamie? Jamie's lost. He's like, I got pizza on my face. I don't know what's going on.
I did have pizza on my face. I'm not gonna lie.
I mean, look at the CME Bitcoin futures. Yeah, take a look at this shit. I can't actually make this full screen because I don't have a subscription to this. And I tried subscribing through my institutional account, and they were like, no, fuck you, you don't count. I was like, oh, but I have a company. But yeah,
Jesus.
Right? Like that's really impressive.
I'll be really interested in looking more of that data. I'll have
And it's funny because BitMEX's open interest is not following along the same trend. So somebody, and oh, thank you. I finally remembered the shit that I had to cover, which is this Zero Hedge article. This Jim Simmons guy. I think we talked about it briefly on Tuesday, but there's this medallion fund. This guy is like, look at him. He's like, oh, I just sit around and let my robots trade for me. He runs this place called Renaissance, and evidently he's got one of the most robust artificial intelligence trading programs. He's like, oh, the computer runs itself, and we hardly ever interfere. The machine tells us what to do. Every experience we've had shows that humans mess up worse than machines. Fair enough. I don't disagree with that, but like the guy's just sitting in his office smoking a cigarette, bossing around. I think that the most fascinating part about this article is that this big fund has gotten into cryptocurrency, and they put a majority, actually I just made that up. I don't know how much they put into this crypto trading portfolio, but yeah, you're seeing growth rates on the CME Bitcoin futures, according to this, back in March was making new highs. This continues to move higher. So, Wall Street institutions, whoever the fuck it is, they're all piling into this thing. And this Rentech or Renaissance, they've also launched their funds into this program. I would try to find this article. Maybe I'll put it in the bottom of the YouTube comments. This is quite a lengthy article. Try to understand. There's the stock to flow ratio that the article mentions about how Bitcoin's going to be worth $30,000 by the end of 2020. Those are all nice headlines. Is that going to happen? I don't know. This stock to flow ratio is a really interesting article that was published on Medium back in like 2016 or 17, whatever it was. Hey, anything's possible. If the world is really going to shit, we're going to see inflation, deflation, or the US dollar get devalued. Yeah, it makes sense to own own assets like gold and cryptocurrencies. Sure, why not? So interesting articles, and maybe that's what's behind these rises. But it's always that, yeah, here's the Bitcoin to S&P chart. You can see that everything seems to be rolling up together. In fact, this still seems correlated to me. Even though Bitcoin and Ethereum made new highs and the S&P did not from the beginning of April, it still seems like they are somewhat correlated. So
yeah, it's still correlated, man. I agree. Still correlated. Even though BTC had that big step move up, it was still correlated to the S&P regardless. So I mean, for now, we've just got to wait until it decouples at least to see what the true potential is for the medium term for BTC. Decouples at least to see what the true potential is.
But it sure looks like it wants to run. Look at all the stair-steppy wave. But it sure looks like it wants to run. Ethereum and Bitcoin on the hourly chart. Stair-steppy wave hasn't quite moved up. But the other currencies,
it's difficult because I mean,
hasn't quite.
I think this is the first time where people are it's truly looking at the correlations between the different markets. So, I mean, I think it's pretty. I mean, yeah, it's moved up and it's been a good move. But then at the same time, I still think it's pretty fragile. I mean, volume's not exactly crazy at the moment. I don't think from when I last looked.
But you have to be careful
because
because
volume's not exactly crazy.
And I think that's the big mistake everybody's making is based on that article as an open interest. You got to look at the CME volume. So let's take based on that. Yeah, let's see what that looks like. You got to look at the CME. So let's take based on that. Yeah, let's see what that looks like. Do you remember how to get? Is it XBT? Is the CME? Yeah, here it is. So here's the. Do you remember how to get? Right? Is it XBT? XBT CME? Yeah, here is this the right thing? So here's the. Do you remember how to get? Right? Is it XBT? Yeah, I mean even CME. Yeah, here is this the right thing? So here. That can't be right. Do you remember how to get? Right? Is it XBT? Yeah, I mean even CME. Yeah, here is this the right thing? So here. Let me Google this. I feel like I'm gonna do it. CME BTC. Yeah, I mean even let me Google this. CME, BTC. All right, so let's just take the data right from the horse's mouth here. We got CME. Let's go with the April contract. All right, so let's just take the data right from the horse's mouth here. We got CME. Let's go with the April contract. All right, so let's take the data right from the horse's mouth here. We got CME. Changes to candles. Yeah, so it's interesting that the volume isn't quite what it was in the beginning with middle of April 6th. It looks like those were your peaks, but let's go to beginning to middle of April 6th. It looks like those were volumes, but let's go to so let's go with the May contract here. Take a look and pop up. Boom. And so let's go with the May contract here. Yeah, so on a daily chart, look at this crazy volume coming in on the May contract. This is the futures contract. The interesting thing is that we're getting to the end of the month, and everybody remembers from the past few years that this is the futures contract. People in Wall Street like to manipulate the price of Bitcoin to the downside to make money before that Thursday and Friday expiration because they paused the contract to make money more than I think it was 5%. So what happened was because they paused the contract prior to the expiration day, or even the day prior, you were able to bypass those circuit orders, and that's what's been happening. So we've got another. You were able to bypass. Call it 6 days for this. You know, we've got today, Saturday, we've got another Monday, Tuesday, Wednesday. So maybe Tuesday the 28th, we may see some fireworks where they just wash the positions out down and up. So maybe Tuesday the 28th. I hate to say this, but I would actually be looking to get long just from the way the CME contract is behaving. This looks bullish to me. I must be fucking drunk. I mean, obviously I am. I finished a bottle of scotch, but this looks bullish. Nonetheless, like I was bearish as fuck at the beginning of the week. I can't say that I have lost that conviction because nonetheless, of the potential risk to the downside of the broader market that will impact the underlying price here as people try to bring spunks for any potential margin calls. But that may be an old narrative. The underlying price here. I mean, with the halving coming up, and it looks like all the altcoins margin call bids. Tezos look strong. Ethereum's rolling out their nonsense 2.0, whatever the hell that is. We could actually get the perfect storm here where stocks go sideways and people are like, well, let's make some money in crypto. That makes sense to me. So I can't help but be bullish with it. I mean, slightly bullish with a longer term bearish outlook into end of May, June, or even middle of May as things start to settle down and people realize that even though we're opening up the economy piecemeal, there's still a risk to the broader market. As even though we're opening up, people realize small businesses are a big part of the economy here in the United States, and if they're not doing well, if they start closing down, you see increases in unemployment, you're going to see things like real estate go down. You're going to see things down. I'm getting off topic, but nonetheless, short term, see things like after the expiration in April here on Bitcoin, I could see things, but nonetheless, really start to rally here in crypto if the broader market goes sideways. So, interesting stuff. I can't say that I'm taking a trade one way or the other than the fact that I'm already long from interesting stuff. I guess it's middle. I can't say that I'm taking a trade one way or the other than the fact I think I hold positions in things like Tezos, things like EOS, and I think I hold positions in things like Tezos. Anything that's on Coinbase, I own a piece of, with the exception of Ripple and Bitcoin Cash. Anything that's on Coinbase, some of the other bullshit names like Link and Algo. Actually, I own some Algo, which is stupid. But anything that's on Coinbase, I think we may actually enter into a time where sideways stock trading is good for crypto. That's all I have to say. I think we may actually enter into a time where sideways stock trading.
Drop the mic, man. Drop the mic.
Yeah, we've gone on way too long. Obviously, it's an hour and 40 minutes. Upside target.
Drop the mic, man. Drop the mic.
Yeah, but this was fun. I had a great time with you, man.
Man, it's been good.
Upside target. Anything you want to pitch in here before we decide to go? I mean, I'm sure you're late. Off that you ate dinner by yourself. Anything you want to pitch in here before we decide?
She ate dinner hours ago. She hates me. She just like, yeah, look, old man, you can eat pizza later. She ate dinner hours ago. She hates me. Yeah, look, old man, you can eat pizza later. I mean, for me, I'm a crypto friend. Yeah, I mean, I just hold BTC, and then I mean, I had a couple of crypto names where I took some profits the last couple of days, like NMR, and then that's where I took some profits on that. But yeah, other than that, same old, same old. To be honest, I'm just more than happy just holding BTC, and then just seeing how all unfolds. I just find it quite difficult. Like you were talking about, when you're having these down markets, it's difficult to know when to come in, because I mean, it's nothing like looking at stocks and shares and knowing the fundamentals and then understanding when they're going to get uptick for the next 1, 2, 3 years. I mean, it's just a roll of the dice in a lot of circumstances when it comes to 99% of these alts. So yeah, I mean, yeah, same for me. Just hodl, always hodling, and that's about it.
What do you think about Tesla? Do you know anything about that from a fundamental?
You know what? No, you know what? I probably should look at it by now.
What do you think about
a few of my mates. You know what? OGs back in the day, they're always like, "Oh, do some TA for me for Tezo." So that's the reason why I've tweeted that out quite a few times, is simply because they've asked me for Tezo. So that's the reason why, to be honest, in general, quite a few times. I probably could have a look at the fundamentals of it. It's just, yeah. I mean, my mates are more like more the TA part. Like, should I sell now? So I just give my risk management 2 cents on it more than anything. Yeah, maybe I should start dipping into a couple and seeing how things have changed, because I honestly haven't had a look at anything for a year. So a lot has obviously changed in a year. There's a couple of names that I do like. I suppose more just from the use case aspects. Like I really like BATs, like basic attention token. I use the Brave browser. I suppose more just from the use case aspects. And I really like the Brave browser. I think it's really good. So I mean, for me, yeah. But I mean, it's just so difficult because most of it's technical. So I just stick to my stocks and just hodl the king of all, which is BTC. I just stick to my stocks and just.
Nice. I actually believe that Tezos is going to outperform a lot of these other markets. I think even more so. I actually Bitcoin and Ethereum. There's something here that, and I don't even think I understand it well enough to make the argument on air yet, because it's sort of, and I don't think it's new. Like this technology seems like it's very promising, but that's how I felt about Ethereum and Bitcoin back in the day. And then, as I started picking it apart and finding the flaws with it, I think the fact that this is new and the staking situation with Tezos, picking what you can do with it, hasn't been picked apart to the same degree, and people are kind of worshipping it in a way that they were back in the day for Bitcoin. degree, or more so Ethereum, right? Bitcoin seems to have proven itself in many ways. Unfortunately, I think people misunderstand Bitcoin. They compare it to digital gold, which is bullshit. They compare it to a currency, which is bullshit as well. Really, this has become a speculative instrument, which I don't think the creators intended it to be that way. But absent getting into the fundamentals, the core principles of it, I think that Tezos represents something to the community that they feel like the crypto space was missing. And I think that's why this is catching such a tremendous bid. From a technical perspective, we are certainly into a point where one must be taking profits here. I mean, $61.82 we're trading at 275. Highs one must be taking profits here. Definitely overbought here on our side, but there's no doubt about it. From a weekly chart, this shit's rolling up. I mean, it looks great. I think there's going to be a pullback at some point, and I think that's going to be a buying opportunity. I've definitely traded this in the past and done really well. In fact, my percent returns on Tezos are consistently higher than Ethereum, but my sample size is back lower, so I can't definitively say from a statistically significant point of view or standpoint that this is the better say from trade. It's just that it's been more bullish than most of the other space. I like it a lot. A lot of people are talking about Dash. It's just that, Dash seems to be tracking Ethereum. A lot of these names are tracking. I like it a lot. A lot of people just look at the left side of my screen. You can see how closely all of these charts are following. A lot of these names are tracking each other. Dash, EOS, things like Ethereum Classic, even your ZRX, which is supposed to be the next best thing, that kind of faded into the background. Lumen, that was something really exciting, although this seems to have popped. Wait, wow, look at that. I didn't realize that looks a lot.
You've seen a couple of the old school names now moving. I mean, Digibyte as well has moved quite a bit over the last few. You've seen a couple of the old school names now.
Something's happening here. I can't say that it's alt season definitively because we're still range. Something's happening. Give me a new high at this like 9 cents, and maybe I'll get really excited about something like Lumen, which give me a new high. For the longest time has done absolutely nothing. But things that I like trading, I mean, even this ad of Lumen, I've always liked this as well. The problem is, I think the developer has a drug addiction and alcohol problem. Ironing out the problems with the network have been an issue, and making sure it's stable because of his issues have kind of dragged the price down. But I think that I really like this network, and I like what it stands for as far as staking is concerned. I think that it's got an interesting payout over time. What it stands for, this thing from a daily perspective is starting to put in double bottom. So give me another day and confirm this long double bottom. I'm pretty interested in that as well. Things are looking up here another day, which kind of concerns me because I never like when I see that things are rolling up. Because usually when you see the broader market, I never like altcoins start to roll up. You get this like quick movement higher into the Fib retracement levels, and then they just shit the bed, trapping everyone long. People jump the gun on these things, so we'll have to see what happens. But anyway, I'm rambling. I apologize. I hope I didn't move this at least somewhat informative for you. Anyway, I don't know who's listening to us, but they're probably just fucking drunken sailors. At least somewhat for you.
Oh, we had fun. It's all good.
Yeah. So we'll see what happens. I think next week's going to be fascinating, and I think we definitely need to start making this a Monday or Tuesday thing. So we can have our optional Friday happy hour, and we'll make it a little more friendly for you and try to keep it an hour. Maybe we can have our optional Friday. Finish a bottle of whiskey before we start.
Yeah, exactly. Midweek makes it impossible to have a whiskey when you've got to concentrate fully.
Yeah. But this was fun. I feel like we didn't flash the whole thing, and we had this somewhat logical, it's the same conversation. Yeah. But this was fun. I feel like we didn't flash the whole thing.
Yeah, man.
It's the All right. Any closing thoughts or anything that we missed? Anything you want to chime in? Is your face burnt with cheese all over it?
Oh man, that was so good. I'm dehydrated now though. The salt levels must have been through the roof for this pizza.
Yeah,
I'm
you
gonna have
better
to write a
get
letter. Oh man, that was so good. I'm dehydrated now. No, honestly, no, nothing at all. Just as usual, the volatility is relatively high still. No, it's just understanding your risk exposure to different assets or sectors. So other than that, there's not really much more to say, to be honest. I mean, we can't really speculate into the medium term. The only thing we can speculate are the things that come out in the days and weeks ahead. So so just make sure you come back. Anything we can speculate by Monday. Just don't risk too much. Just keep a low level of risk until there's more certainty for the medium term. Personally, just don't risk too much. Just keep a low level.
You gotta have your
risk until
risk
there's more certainty for the medium term. Personally,
should we commit to like a Monday or Tuesday show? You gotta do like better Monday or Tuesday.
I like the sound of a Monday. I don't mind a Monday at all.
Really? So we shouldn't give the market a full day to sort itself out.
I like the sound of a Monday. I don't mind. Yeah, that's a good point. Actually, maybe we should do
the market a full day to sort itself out. I mean, whatever works for me at this point.
Yeah, that's a good point. Actually,
sitting at home, waiting for things to happen. Whatever works for me.
I'm working hard.
Sitting at home, waiting. I know you are. Jamie showed me before the show what he's been working on.
I'm working hard.
Doing a really good job. So you guys maybe will benefit from Jamie's knowledge down the line.
I'm working hard.
Really good job. So stay tuned because Jamie's become the real. Maybe we'll benefit between the two of us. I'm just the monkey behind the scenes that clicks the buttons and shows the squiggly lines. Maybe
we both know that's not true.
No, but I think Tuesday would be great. If you're down for a Tuesday,
we both know that's not true.
Like 5. I think Tuesday would be your time, and keep it to about an hour. That would be really fun.
Yeah, so I'm always down for it. I enjoy it, especially I suppose, like you said, we get to a trading day, so that we can analyze one day, I suppose. I enjoy it, especially I suppose, like you said, we get trying to predict the rest of the week. So we can,
yeah, I have a feeling Monday's going to be a pretty heavy news day. There's going to be a lot of shit in the market.
Trying to predict the rest of the week.
When's the next Fed? I have a feeling Monday's going to be a pretty heavy news day. There's going to be a lot of shit in the market. Meetings and calendars. It looks like we've got a Fed meeting coming up. Meetings and calendars. All right, so April is the 28th and 29th. So that's actually Tuesday and Wednesday. We won't hear from the Fed until the 29th. April is the 28th, 28th and 29th. So we could do a pre-Fed. I would imagine that we won't hear from the Fed until the 29th. Maybe they cut rates and that TLT. We could do a pre-Fed. I would imagine that would be interesting.
That would be pretty cool.
Well, you got to put some.
I don't know if they'd be able to reduce rates even more though.
That would be interesting.
Because I don't know if that helps the the smaller banks to reduce rates even more though. Because I don't know if that helps the
Fuck the banks. Let me tell you something. Those PPP loans were a bunch of bullshit.
Because I don't know if that helps
Fuck the banks. Let me tell you something. Those PPP whatever. So let's aim for Tuesday, and then maybe we can do another Friday show and get fucked up again like this. Whatever. So I will need another bottle of bourbon or scotch before we do it. Or I've got a bunch of beer and a bunch of wine. I've got in this. Have you ever heard of natural wine with bourbon or scotch?
Natural wine.
Or
is it the new hipster thing?
It really is. So it's basically unfiltered. It's like some bullshit where the farmers like, oh, it's organic. We don't use any chemicals, which is great. The goal is to not use sulfur to stabilize the wine. And then there's this other subcategory called like Pétillant Naturel. The goal is to not use. You allow it to ferment in the bottle so it gets fizzy. And it's got this like. Have you ever had kombucha? You allow it to ferment.
I haven't.
Bottle so it gets fizzy. So it's got this like. Have you ever had to describe it? It's like almost like a sour component to the wine. So it's got this like where it's got this murky, cloudy, unfiltered component. And it's very different than your traditional wine, but it's fucking delicious. The first time I had it, I was like, this is so very different. And then all of a sudden, I'm obsessed with it. So I've been ordering all this natural wine from these crazy places around the U.S. And then all of a sudden,
So yeah, long story
so
short,
I've been ordering all this natural wine from these crazy places around the U.S.
Cool.
All of a sudden,
cool. Yeah.
long story cool. Me too. And everyone else listening, like, join us.
Cool.
Have
Yeah.
a drink with us. If you want to pop in.
Yeah, I think that's the most important thing. I think the only way to truly enjoy this is by getting drunk with us. It's the only way. Yeah, I think that's the most important thing.
So our
I
Friday
think the only
shows
way
are
to
obviously
truly
gonna be a
enjoy
little
this
lighthearted
is by getting drunk with us.
up and can't keep
It's
on
the only way.
task.
Yeah, I think that's
Again,
the
if you want
most
to pop
important
in
thing.
during the show, you've got something to
Enjoy
share.
this.
You're
By
from,
getting drunk with
you
us.
know me from the
It's the only
past,
way.
and you want to,
Again, if you
you know,
want to
enjoy a nice Friday discussion. We're happy to include anybody that wants to jump in here. It would be great. You know, tell us what you're drinking. We don't even care what you want to talk about during the show. Just fuck it, we'll do it live. It would be great. Let us know. Tell us what you're drinking. You've listened this far. You're probably likely to jump in with us. Just have a good time. That's the point of this show. Let us know, and we'll see what this thing develops into. But I think our Tuesday offerings are going to be serious, and we'll keep to more of a schedule and the 1 hour
Yeah,
time frame.
definitely.
What this thing develops
Yeah.
into. But I think our Tuesday offerings. All right, what do you say we wrap things up? And we'll keep to
Let's knock it off. Stay safe. Don't get Roned.
But I think our Tuesday off. All right, what do you say we wrap things up? And we'll keep to
Let's knock it off.
If I get
stay
one
safe,
more
don't
email
get
from a
Roned.
company telling me their
All right, what do
plan
you say
for
we wrap
COVID-19,
Let's
I've been
knock it off.
unsubscribing. If I get one more email and also not using their services, it's like I get an email. If I get one more,
this is how you can stay safe
not
during
using their
COVID-19.
services.
Bank online.
Pay your bills online. You can call us on the phone if you need anything, but we won't do shit for you. Thanks a lot. Fuck you. I could do that already, but we won't do shit for you. Let's cut ourselves off. Fuck you. It's cutting me off here. It's been fun. I hope you enjoyed our whiskey offering here. Join us on Tuesday. It's been fun. We need to come up with an official name for the show, and stay tuned for like a chat. Join us on Tuesday. We're planning on doing something like that in the future. Should be some cool stuff. And of course, we've got the paper trading platform live, so you can start following along to see either how smart we are, and of course, we've got the paper trading platform live, so you can start following along. Whatever you'll find out how smart we are. Whatever we do, doing the opposite is just is more intelligent than the position. You'll find out. So it's been a good time. Let's cut ourselves off until Tuesday. Thanks everyone, and so it's been a good time. Take care.
Take care, guys.
Bye.